Are watches truly investments? Over the past few years, we've seen fluctuations in price and buyer behavior and market trends where it sort of left the new entrant or existing buyers with a lot of confusion as to, is this timepiece that I actually purchased worth the money that I bought it for? And is it really an investment? I think in a traditional sense, investing is understood in a certain way, but to invest in luxury watches, it needs to be understood completely differently. So if you look at a traditional investment, it sort of has a few components or elements you'd have to look at before making a decision to purchase that investment or to spend money on it. And one of the first things that you'd look at is the risk profile of that investment. And in the watch sense, it would be, how much are you going to have to give of yourself in very simple terms, and how much will you be getting back? It's a real push-pull relationship, because if you are risking a certain budgetary amount or certain finances towards a luxury watch investment, will you be seeing a return on that investment, or will that just be something that you ultimately want in your collection to be part of this collector's personality you are forming? So the risk profile, really important. Then will be price. I think that's quite an obvious one, because you've got pricing categories and different brands with different pricing. In terms of other investments, there's a lot more involved with calculating, say, the value of a specific share in a company, or gold and silver fluctuations on the market in terms of commodity values. When you're looking at watches, they are completely unique in that sense. They've got their own way of evaluating themselves, basically based on the trends in the market or the buyer behavior in the market. But I think price, main considerations for new entrants or existing buyers would be the actual retail price, if you are going to purchase it from an authorized retailer or dealer. And then on the secondary market, the resale value. So that is, what can you actually get for the watch once you've purchased it and intend to resell it? I think a lot of buyers make this mistake where they also purchase with resale value in mind. And I think for building up that collection that you maybe intend on having, it's not necessarily the right approach. I would look at price in terms of your budget that you've already pre-allocated to spending on luxury watch investments. Then you'd have to look at market depth. Market depth, brand depth, sort of something the same in the watch sense, because the depth that a brand like Rolex or Patek Philippe will have is historically richer and stronger than a lot more of these independent watch brands or emerging watch brands that are also seeing a lot of buyers interested in. And it doesn't mean that it makes these more historically bigger and powerful brands better. It just means that your investment structure is going to look a little bit different, or more differently than if you're only focusing on newer independent watchmakers versus longer standing manufacturer-based watch brands. I think that is a crucial element to consider when you are actually going to make that first purchase, and whether you want to deem a watch to be an investment. The liquidity of it's also really important, but watches are pretty illiquid, and I'll explain why. When you make a purchase, when you purchase a luxury watch, hopefully it's for the sake of actually wanting to wear the piece, because you should be enjoying your watches. But also, if you're buying it for an investment or for investment purposes, you should also take into consideration that the watch market is highly volatile, and realizing the asset as you purchase it might not match the hype or the trends that are set on social media or online, where you're thinking the watch you are buying is actually worth something when it's truly not, especially not if you actually even out that cycle over the next 5 to 10 year period. You might run into some troubles there financially, or just by making a bad investment and not actually purchasing the watch that you want. So that's really important. But how watches are like traditional investments are by potentially, looking at what's been happening in the auction space. So if we want to see how they fit into these classes or categories of analyzing investments traditionally, like you would with property or equities, as I explained, it would be that on the auction or secondary purchase market, there's been a massive upswing in buyer power and buyer spending in the auction space, where I think it's Sotheby's, Christie's, and Phillips. They've indicated massive increases over just the past year or two. And that is sort of showing where this market is heading. The secondary market is still strong, so don't get me wrong. The primary market, however, is definitely not disappearing either. And you need to find out where you want to position yourself in that. But how this really translates back into whether the watch is an investment is based on the fact that it gives some kind of yield thereafter, because you don't want to be making a bad investment and you don't want to be making a loss. So when you're making that purchase, it's all about seeing what can I get from this investment to, if you are treating it like a traditional investment. So the auction and the secondary market is really showing a good indication of, a yield or a return on investment there. Where watches do not act like traditional investments is that they can be highly illiquid and highly speculative. So there's been this emerging trend to, obviously over the past 5-6 years, hype up certain watches and certain brands to try and make quick sells. And I'm sure most purchasers and most collectors have come across this trend, especially on social media over the past 5 to probably 8 years. And that has created a lot of speculative bubbles in the watch market, which has caused a lot of buyers that aren't retailing or they aren't reselling at a hyper fast rate to fall into really bad traps where they make purchases that they cannot afford, and then they cannot afford to keep the watch thereafter because it's lost all its value. And this happened with even some of the big brands like Rolex. After this COVID boom, a lot of the prices of the watches dropped dramatically, and newer entrants or people that thought they were buying a luxury item are sitting with a timepiece that they can't afford. They have to get rid of it because they weren't planning for a long-term investment, and now they are sitting with cash flow and liquidity issues. So generally treat watches as highly illiquid. Don't be buying don't treat it as an investment that's got some liquidity or cash flow element attached to it. A watch is not there to actively create income for you. It's not an active income generating asset. It's a passive asset and not necessarily income generating. It depends on your use for it. But whether the watch is an investment is going to depend on a bunch of different behaviors rather than these traditional classes of risk, liquidity, brand and market depth, etc. It's rather going to be focused on watch trends themselves within the watch market without comparing it to other assets. And this is really going to shape buyer behavior going forward, and it will probably change the perception of whether watches are investments or not into the future and into the coming years, which is an exciting prospect. I think where watches also aren't like traditional investments are because they have a certain function attached to them that's different to a traditional investment. If you own a watch, you are probably going to wear it, or it will be stored in safekeeping. And let's suppose you are wearing this asset. There are very few assets that you are willing to spend $10, $20, $30, $100,000 on that you would be wearing it in such a risky place. And in that sense, I mean on your wrist. You actually have this active asset with you, but it's not generating anything. It's only telling you the time, or it's there as a personal, intrinsically valued item. And you don't traditionally have other assets fit into that style of investing where you'll be having that asset on you at all times. So that really creates an interesting dynamic and outlook for prospective and emerging buyers into these markets, because you should be considering the idea of a watch being an asset class of its own. It can't be treated traditionally and the same as making a property investment or making a investment into portfolio of equities and shares, etc. So very big considerations to have if you are entering into the market. It's exciting. Collectors are growing year by year, month by month, and I think what's going to be happening to the luxury watch market is going to be something incredible in the coming years. So make sure you collect with all of the above in mind, and just think about why you're actually making that purchase. And the investment value of the watch doesn't necessarily have to be the price. It could be purely intrinsic. And if you are purchasing a watch to be able to get into certain categories of business deals or certain conversations where it could spark potential future deals for you or for your business, that is an investment. Even if the watch is worth nothing after you've purchased it in terms of its liquidity or its monetary value, it's going to yield a lot more in terms of that intrinsic and personal value that you can attach the timepiece to in other facets of your business or investing journey.